18th of March 2026. I'm your host today, Finn Judell, client advisor at MPC Markets. Look, market is in a pretty precarious spot. Not going to lie. Obviously, with the geopolitical situation in Iran, but there's a bit of uncertainty in the market. Despite that, the S&P 500 is up 0.25% for the day, with the close at 6,716. The Nasdaq rose 0.47%, and the Dow remained relatively unchanged. Markets are kind of caught between competing forces. We've got elevated oil prices, obviously, and a pivotal Fed decision looming tonight, and a postponed US-China summit, and obviously the Iran conflict, which is now in its third week, and no ceasefire in sight. Looking over at commodities, tend to be the main focus, obviously, with oil surging 40% from the beginning of the war 3 weeks ago. Spot gold is relatively unchanged, seems fairly stagnant, around $5,000 an ounce. In currencies, the Bloomberg dollar spot index dipped slightly on the day despite its multi-week safe haven rally. Euro up 0.3%, sterling up 0.3%, and the Aussie dollar gained 0.5% following the RBA's second consecutive rate hike on the back of these heightened oil prices. Yield curves continued to flatten globally, which bond markets are increasingly reading as a sign of potential growth slowdown, filtering through the oil shock. Looking at some of these commodity prices, you can see Bitcoin showing some signs of life in an area of uncertainty, which is, it's kind of an unsure asset. It's not sure whether it's risk on or risk off, or a hard asset or a speculative asset. It's showing a bit of life in some times of uncertainty, which is quite interesting. Obviously, you can see crude up over 10% for the 5-day. Iron ore, coal also up around 4%. So look, having a bit of a rally of these hard assets. We'll see what happens, but obviously, oil has been dominating the markets. Brent crude has settled above $103 a barrel, up 3.4% on the day, and WTI is up to 95.47 a barrel, up around 3%. So look, the Strait of Hormuz is, whilst there's a few ships kind of passing, hugging the Iranian side, it's obviously still closed. I'm not a geopolitical expert, so I have no idea when this thing's going to open up. However, it doesn't look like we'd be relying on a ceasefire for the strait to actually open up, and it doesn't necessarily look like we've got one in sight. US petrol prices are up around 25%, diesel above $5, and jet fuel up more than 50%. So it's not great for markets in general, inflation in general. We did build a pretty fascinating tool around the kind of oil shock we've seen through the closure of the Strait of Hormuz. It shows, the economic implications of what this would look like. Obviously, 3 weeks closed, 4 weeks closed, we have a sliding scale showing all the economic implications of, what the situation would look like if the strait remained closed for a prolonged period. So if you're keen to have a look, every investor should scan the QR code. There will also be a link in the description where you can have a look at this data. Very fascinating data. Definitely recommend you have a look. It's also available on Mosaic. So, feel free to get a 30-day free trial. It's still available. So welcoming any viewers to try out Mosaic. You can get all the data you need. I'm including some of the most important data right now, which is on the Strait of Hormuz. So visit us on mpcmarkets.com.au and click sign up for a free trial, or visit mosaic.mpcmarkets.com.au. Thank you very much for your time today, and we'll see you in the next one potentially. If it's not Mark, it's probably me. So thanks for having me, and see you next time.